Gold is coming into a position to complete a weekly low. What do we mean by a weekly low? That's a low that lasts several weeks and then should be followed by a net bullish trend for at least 3 to 4 weeks, if not longer. Hi, I'm Robert Miner with Dynamic Traders Group, and this is a short video we do every week for our Twitter and YouTube followers. It's a much shortened version from what we do for our DT Report subscribers for all of the major markets. Today, we're going to take a relatively deep dive into the position of gold and identify a potential weekly low here in the next week or two and the conditions to identify that low. Remember, it's more important to know trade strategies than it is to forecast. So that's what we focus on at Dynamic Traders Group. We'll also take a look at a couple of markets that we look at often in these updated videos, including the market we looked at last week, which is the S&P, and I got a couple words to say about Bitcoin as well. So let's get started with the gold market and take a look at the technical position and how it might set up for a specific trade. So this is the gold weekly data. Of course, this week isn't complete yet because I'm recording this on a Thursday evening, but nothing significant is likely to change in just one more day on this weekly bar. Two pieces that are significant, two pieces of information very significant on this weekly chart. Number one is the weekly momentums have reached what we call dual look back oversold. When they're dual look back oversold, it's a really strong warning that this market is near, when these are weekly bars, near a weekly low. And again, if a weekly low is complete, we anticipate at least 3 to 4 weeks sideways to up in this case. We also have the potential for a really nice A, B, C correction. But what's more important is the timing position, is that next week, the week ending May 13th, is a high probability time target to complete a weekly low based on a couple of things. Next week is the 100% alternate time projection of this initial decline from the weekly high that was made on the week ending April 22nd, which we had projected several weeks in advance as well to be a weekly high. It's also 6 weeks from this last low. So if we wanted to call this is a potential. I always have question marks around labels until they're proven, but if we call this an A and a B, then the 100% alternate time projection of the wave A is next week, and that's fairly significant. Gold has had a real strong 5 to 6 week reversal cycle, and so there is a 6-week count from this low into next week with the the weekly momentum's dual look back oversold. Kind of the same position as this early April low, except this was not a dual look back weekly momentum oversold. It was just the 8 was oversold, single look back. This is maybe more significant. So that itself is a wake-up call. If gold were to complete a weekly low without having closed below 1836.50, it leaves open the potential that this indeed is an ABC correction. And what follows a correction? Resumption of the trend prior to the correction to a new extreme. Let's take a look at the daily data. Well, this is the gold daily data. It's the June contract. So a couple key things to look at here. Number one is that what would reverse this trend from bearish to bullish just based on some simple pattern? Well, certainly if gold were to take out at least a minor swing high close, that would break the pattern, lower lows and lower highs. So I've just drawn a horizontal line across the close from last Friday, and should gold close above 1911.70, more than likely that weekly low would be complete, and we would then be orienting ourselves towards identifying specific go-long trades for a probable bullish trend of 3 to 4 weeks, if not more. However, I suspect is that when we look at the daily momentum bull reversal a few days ago, actually near the end of last week, the advance has been very lethargic. And it hasn't been impulsive, in other words. That usually means that this is making a correction and there's a probable new low to follow before that weekly low is complete. Again, the ideal week is next week, so that kind of fits in with that. And it's very similar to back here. Gold made its daily momentum dual look-back bull reversal right around here, up for a couple days. Then it just spiked down for a few days before then it completed that weekly low and then continued to advance for about 3 weeks. So I don't know if that's going to replicate this time or not, but it's why I wouldn't be anxious to get on the long side of gold quite yet until gold either closes above 1911.70, or if gold should decline for a few days. Let's take a look at the 240-minute data. There we go. This is the 240-minute data, and this is just the last few days, that little 3-day advance. This is very much a corrective pattern, or more than likely at least a corrective pattern. And should gold just trade below 1861.20, that's the low of Wednesday, more than likely it's going to continue to a new low. That's what this is at least indicating will probably occur. If that should happen, knowing that next week is a high probability time target for a weekly low, and that the daily momentums are not far off the oversold zone, is that the downside target, the high probability downside target, would be around 1831 to 1808. So I don't know what gold's going to do. I don't forecast, but I set up certain conditions that if they're met, then they mean something. So if gold should continue to decline into next week and reach around 1831 to 1808, I would be very alert for a reversal signal and a reversal confirmation signal that a low is probably complete, and then identify a specific go-long trade strategy. That's what I'm looking at for gold in the days ahead. How about a quick review of the S&P and Bitcoin? So this is the ES weekly data. I usually look at the SPX cash data, but I've updated my ES weekly data. This is the June contract. So let's take a quick look at this. If you listen to the video from last week, you know we're looking for the market to continue lower, continue in the bear trend for another 2 to 3 weeks. Well, so far we're another week into that. Let's just take a quick review. The 8 weekly momentum has reached oversold. That usually means that we're within a couple of weeks of completing a weekly low. There's a key time factor, not this coming week, but the week after that, the week ending May 20th, for a probable weekly low. It's the 100% alternate time projection. So here's the price level to be aware of on the downside. And that's around 39.92 to 39.50 in the June ES contract. That's the 162% external retracement of this little pop-up this past week. Not so little, but the pop-up. And it's the 100% alternate price projection of this decline into the February low. Keep alert to those levels. They happen to be right where the channel line is also. That should the S&P decline into those levels, look at your other technicals for a potential for a weekly low. And certainly if the ES were to make a weekly close below 39.50, well, that would be exceedingly bearish, although we're still going to be looking for a weekly low here in the next couple of weeks. Here's the daily data, and let me update this a little bit on what we're looking at a week ago. Probably 1, 2, we're looking for a 3 and a 4 to happen. Looks like that's probably occurred this week. And if that's the case, again, the ES should make a new low before it completes this decline. And based on the daily data and the count I'm showing here, ways 1 through 4, that ideal downside, if this is a 3 and a 4, would be around 39.70 down to 38.79. And that overlaps with some of these weekly projections, which are around 39.91 down to 39.50. So this just fine-tunes them a bit. So that's what we're looking at for the S&P. And the S&P, the pattern has been really helpful to identify the continued trend of the market, and more than likely it's going to continue lower. Boy, what a last couple of days we had, right? Well, when something like this happens, like on Wednesday, this big up day after the Fed announcement, and if you're prepared for that and know that more than likely that's not the beginning of a bull trend, but the market was in a position to make a corrective advance, you wouldn't get too excited about it, knowing that more than likely the ES was likely to turn around and make a new low before it completes a weekly low. Let's take a quick look at Bitcoin. So this is a Bitcoin weekly data. Of course, the weekly bar isn't complete yet, but I just want to bring to your attention that the weekly 8 momentum is oversold. So Bitcoin should be close to completing a weekly low. I also wanted to show you here is that Bitcoin, for whatever reason, frequently makes a reversal right around a Fed announcement. So in the last couple Fed announcements, you can see was right on the week of this January low, and that's 2 announcements before. The last one was right on the March low. And then we have some reversal here that just lasted a couple weeks. This made a reversal about the week after the announcement. This one was the week of. So you want to be alert for each week when the Fed is making one of their announcements, which was just made yesterday. So knowing that and knowing that the weekly momentums are oversold is that we want to be alert for a potential weekly low. Now, when I say that, that would, once it's confirmed, would be a low that would last a few weeks. However, this advance off the January low, this is clearly corrective. So any advance is not likely to exceed the April high, but still be a pretty good trade opportunity, something to be aware of. Well, that's it for today. It's Robert Miner with Dynamic Traders Group. I hope if you liked what you learned, you'll check us out at dynamictraders.com. Take care. Stay safe.